one of the things that's going on there that I don't think a lot of people are aware of is there are levered ways to play Bitcoin. I mean, look, for the people who are just hodling, and if they can handle the downturns,
Mm.
hey, I think it's going to be worth a lot more. I think you'll be well served to have money there.
Yeah,
But, I mean, obviously, if you're highly leveraged and you bought it at 64 and it plunged to 50, man, you're hurting, because
exactly.
it happens fast, right? You know,
Exactly.
a lot of volatility. So anyway, where do you want to go? Or do you want to start it formally, or you just want to
So
weave
I
your
was
way
kind of
whatever?
right there. I was kind of, I'm pretty sure
Okay.
we'll use that part. We'll get
Yeah.
into it a little
Take
bit.
anything you want. Yeah.
Cool. Yeah. So basically, I met Lawrence. Started following you a couple years ago.
Right.
Saw a bunch of things that you were doing. One thing that I noticed, every quarter you were outperforming the GDX. And you're a gold fund primarily, correct? You
Yeah.
mainly gold miners. And so, you're had this great belief and great timing, and you held on to these positions through 2019. You put together around 100% year, 2020, 100%, another, I think you were over 100% in
It was
2020.
126. Yeah.
Yeah, actually, and you're mixing the macro and the micro, and we kind of wanted to bring you in just because I was like, if there's anybody I would like to talk to, especially at this point when we're looking at, I'm looking at the gold mining space right now. I think it's a great opportunity once again, like earlier in 2020. So I wanted to kind of get your opinion on a bunch of stuff,
Sure.
and I
Happy
think
to
that'd be
help.
great.
Nice to be with you finally after talking on Twitter for all these years.
Yeah.
Feeling like I know you, but haven't really seen you before on the screen. So, um,
Absolutely. So starting out with your macro thesis and going through, and I'll put a link to your Q1 report in
oh,
this.
thank you.
And so going through that, I noticed you were talking about the sovereign debt bubble collapsing.
Right.
And some people aren't going to exactly know why that's significant for gold, but so if you
Sure.
wouldn't mind starting there and then
Yeah.
kind
Well,
of
I'll,
going
I'll
over.
try and connect the dots on all this stuff. So, the currencies we use today are issued by governments, and the governments are run by people who try to stay in office, and they right. I mean, that's a major goal. The secondary goal is to try and make the country do well, but that's kind of comes down the ladder a little bit. They're supposed to balance the budget and not run up the debt, and they collect taxes to provide services, and that's the idealized model. Of course, that's not really the way it works. They've come to view their role now as being one of keeping the economy growing and healthy and keeping the citizens happy. And so what they've discovered is the easiest way to do that and keep getting reelected is to probably spend more than they collect, run deficits, and let the debt grow. And eventually the debt gets bigger and bigger, and it becomes a larger percentage of the economy. And each additional dollar of debt is less effective. I mean, in 1980, when you created a dollar of debt, you might add $3 or $4 to GDP. Today, it's arguable that if you create a dollar of debt, it doesn't even add anything to GDP. I mean, there are times when it does, and times when it doesn't. But the point is that we built the system up so big, it's in a sense it's a bubble, a debt bubble, that you have to keep going or else it's going to collapse. And a similar situation occurred actually if you go back and study the Great Depression. I mean, there was a bubble, there was a growth in government spending, there was growth in debt, throughout the 1920s, and it led to the roaring 20s they called them, and the stock market went straight up into the peak in 29. And then at some point they started to try and dial back the money, and they didn't understand it as well as they do today, and they collapsed it all. The bubble collapsed, the debt collapsed, everything collapsed, and they fell into a deflationary depression, which they had to revalue the currency to get out of. And we've kind of gone through the same cycle, slightly longer time frame. A lot of things have changed, obviously, since back then. But the point is that the government has run up a lot of debt, and debt has to be serviced through interest. The interest comes out of GDP, and so mathematically, and this is on the top of my Twitter feed, if you grow the debt at a rate that's higher than the growth in the GDP, eventually the GDP doesn't provide enough earnings to service the debt, to pay the interest rate, or to pay it back. And that becomes a problematic thing. I mean, in a sense, you're in a trap. And so there are ways to get out of that trap. And I've talked about them a bit in my letters, but one obvious one is you let 1929 occur. You let everything collapse. You let all the debts get liquidated. You have tons of bankruptcies. You have a depression. People lose their jobs, and then you build back from the base. And of course, we know that example, and that was horrific. I mean, my grandparents went through it. They tell me about it. It was awful. And so, one of the things governments are aware of that, and they're aware of that risk. And that's why Ben Bernanke, way back in the day, said, we know how to handle deflation. We've got this tool called the printing press. We're not going to let deflation happen, right?
Yes.
A famous, speech. which set the tone, by the way, for all that's happened since then. And so these debt collapses are dangerous and problematic. So the government views its role as being to make sure there's enough liquidity when such a thing starts to happen. And of course, it happened a little bit in 2000. They cut rates and they fueled the housing bubble, and then the housing bubble collapsed. They cut rates and they fueled what I call this as a lot of people call this the everything bubble, which is interest rates are so low that people all over the world are just borrowing to chase assets, invest in things, even if they don't give that much of a return, because they're starved for some kind of return, whatever they can get. And I think once again we're getting to the point at which the assets aren't generating enough income to support the debt load, and you're starting to see creaks in the system. I mean, you had the IOER blowout, you had the blowout in overnight repo rates when one short period they went up 10 from low rates to 10% kind of in 2 days, and all this informed the Fed that there's not enough liquidity, so they started printing more liquidity. Of course, then we had the mother of all deflationary events, COVID, came around and we shut the economy down. And suddenly there's no activity, there's no income, there's no revenue in a lot of businesses. They were looking at going bankrupt, and the government, and arguably rightly so. I mean, one can debate it, but the government said, well, okay, we can't let the economy implode entirely. We're going to print the money, send it out. We're going to give people checks. We're going to help businesses. We're going to help banks. You name it, we're going to do it. And of course, we've all seen the hockey stick of the money supply growth. And so, which is fine. I mean, one could argue that that's better than the alternative. But once you've done that, that money is out there and it starts chasing goods. And of course, the natural reaction from that is to start to see inflation. And as we were talking about earlier, in the conversation, that inflation is very clearly developing in a lot of areas, in all the commodities, and also in businesses and the PPI, and even starting to show up in the CPI. They've done a very good job of recooking in the CPI so that it hides inflation. They tell us inflation is 1 or 2%, but anyone who lives in America and the United States, or really worldwide, is pretty sure that their spending isn't growing at just 1 to 2% a year. I mean, I know every year my healthcare bill goes up 15% every year, like clockwork. So, and other things do too. So you've got kind of this historical end of cycle debt overhang. And the question then becomes, how are you going to deal with it? You're going to let it collapse. You're going to continue to keep it going by printing like you are, but maybe inflation breaks out, or whatever. And there's an interesting parallel I should talk about a little bit. After World War II, we were in the same situation. The last time that the debt to GDP ratio was as high as it is today in America was after World War II. It may have been similar in the Civil War, but we spent a lot of money during World War II that we didn't have, but we had to do it to win. And as a result, we came out of it with the same high debt burden that we have now. But what they did was very creative at the time. They basically they used yield curve control. They held interest rates down, and they actually generated inflation. They wanted inflation. And they had a much younger, healthier economy that was leading the world, and Japan and Germany were in ashes. And so they were able to get another growth business cycle going that over time the whole price level went up and debt really didn't go up because the government wasn't running deficits. And so they were able to inflate their way out of the problem. And I think that's what they're going to try to do this time as well, is inflate their way out of the problem. The thing that's slightly different this time is that they're running really big deficits now. And so it's going to take a lot of money to cover, those deficits. And, the debt continues to grow. So they're going to have to get the inflation to be really high, arguably kind of approaching almost hyperinflation levels. And that's really going to be a problem for a lot of people. A lot of people are going to suffer from that. The markets are going to suffer from that. And it has obvious implications for where you want to invest your capital. So if you've got savings, you've got money, you've got to decide, where do I want to put it? And I would argue that the worst place to put your money is going to be a bond. The bond holders are going to be royally screwed in this cycle, because you're going to get your money back maybe in nominal terms. You put, $1,000 into a treasury bond, and 10 years later, they're going to give you back 1,000 plus the 1.7% a year.
Yeah.
But the question is, what's the cost of everything going to be in 10 years? It's going to be a lot higher.
Yes.
And it's going to be a lot. So that 1,000 of purchasing power today probably won't buy nearly as much in 10 years. So that's a shitty deal. And to avoid that, you've got to be in my opinion, you've got to be in hard assets. I mean, to some degree, you can be in stocks because stocks will grow with the economy as well. And, they represent a claim on a business. But even stocks, typically in high inflationary environments, they hurt because their inflation, their costs go up. And while their revenues go up, their costs go up pretty fast too. And they're competing with higher interest rates so that, part of the reason why the stock market's as lofty as it is right now is that interest rates are low.
Yes.
And and so interest rates naturally in one of these things they want to go up. And what the government did after World War II, and what they're going to do this time, in my opinion, is they're going to have to implement yield curve control. And so they're going to have to say, look, we can't have higher interest rates because it would kill the economy. We need the economy to get back on a growth track. So what we are going to do is we're going to implement yield curve control. We're going to lock the interest rates at some number. I think in the World War II example, it was like 2.5% on the 10-year. We're going to lock the interest rates there, and that's that. Now, if everyone goes along with that, it might actually work, right? They could have higher inflation, and GDP would grow, and the debt would continue to grow, but eventually the economic activity would narrow the deficits, and then eventually the GDP relative to the deficit would shrink. And I've seen a lot of people right now we're at about 130% GDP to the deficit, or debt to GDP. And I think to be realistic, we got to get it back down to 60, 70, 80. And at that level, then things are more normal. And so, you need to have this high inflation for 5, 6, 7, maybe even 10 years and to get there. And will they be able to do it? I don't know. I mean, the risk is in their doing it is that all the bondholders in the world are going to know, or eventually once they figure out that this is the policy, and of course the Fed is being very, very crafty in the way they tell the story. Don't worry about inflation. It's transitory. We've got it under control. And what they're trying to do with all that language is keep the bond market, calm.
Yes.
Because, the bond market, anyone who owns a bond can always say, I don't want to own this thing anymore. This is not a good deal. This currency is getting debased. I'm not going to have as much purchasing power. I want to sell this thing. And so if they sell it, that, selling the bond makes the interest rates go up, right? The less demand. And as everyone knows, bond prices are inverse to the interest rate. So, interest rates go up, and that's a problem, right? So, the Fed's going to say, well, we don't want those rates going up, so we're going to buy it. Okay, that's fine. If it's a small amount, the Fed can buy it. They've got a big balance sheet. They can add a little more to it. Well, what happens when kind of everybody in the bond market goes, you know what? This is a really shitty deal. I want out. Get me out of these things. I'm selling it to the Fed because I'm going to go buy stocks or gold or Bitcoin. And when that happens, that's really currency failure. That's effectively currency failure. Nobody is willing to believe that the currency will hold its value. And so they want to be out of the currency. And if you look at the history of hyperinflations around the world, and there've been plenty of them over the last couple hundred years, that's how it always happens. People just, they realize, and the tipping point, I should add this, the tipping point is when everyone realizes there's no other way out. Right now, the Fed's done a very good job of saying, look, this is a normal cycle. We had a pandemic. It's been a problem for sure, but we can solve it. We, just the way we solved 2008 and just the way we solved 2000, nothing to see here, folks. We got this all under control. I mean, that's the message that we can all expect to hear from the government. And hey, if I were in there, that's what I would say too. Okay. Yeah. But
keeps everybody.
But I think as a practical matter, they really don't have it all under control. And, that's going to become more and more apparent because they just can't ever stop with this money printing and this growing the deficits in order to keep everything under control. And as more and more people realize they can't stop, then more and more people, it's a doom loop. More and more people are going to go, okay, I get it. We're going to have huge inflation. This dollar's not going to buy me as much. I don't want these dollars anymore. Sold to you, Fed. Well, what happens when the entire bond market sells to the Fed? And remember, when a bond gets sold to the Fed replaces it with dollars in the system.
Yes.
So the person who sold the bond now has dollars that they can go either buy something with, and obviously they're going to look for some other investment. So they're either going to go buy stuff, which is going to push the cost of that stuff up, and all of the supply and demand factors being equal, or they're going to go buy gold and buy gold, silver, buy Bitcoin, because they're going to say, well, these things have been going up and they seem to hold their value or go up in value. So I'm going to put my money over there. And pretty soon, the curve just gets steeper and steeper and steeper. I mean, and I mean, this kind of happened in the 70s. I was, a teenager at the time, but, it kind of happened in the 70s where pretty soon, everyone's starting to think, the dollar's going to fail.
Yeah.
And once that becomes universally thought of, then it becomes self-fulfilling. They're like, get me out of this dollar. I want something else because this thing's not going to buy as much in the future. And so that's the real issue here. And the real thing that people who are investors need to do is ask themselves, of all the assets I've got, what do I want to have, where do I want to have it allocated? And I would submit the worst thing is bonds. The second worst thing is cash. They're more or less the same.
Yeah.
The third worst thing are stocks because they'll reprice in the new currency when it gets set up. And then, tangible stuff is probably the best area to be. And, we're seeing this, Jason. It's really fascinating to me. I'm sure you've seen this in Cleveland. I know I've seen it around here. I know some young couples, people at the gym I work out at, are trying to buy houses, right? And then these bidding wars going on for the entry-level houses.
Yes.
And people are paying way over ask, and they're 10 bids and so on and so on.
Cars, everything.
And so what I think is happening there, I think this is pretty, everyone says, well, why did this housing market suddenly change? I thought we were in a pandemic. Okay, fine. Yeah, we are in a pandemic, but I mean, and that is part of it. I mean, more people are working at home. They realize they need a bigger house, whatever it might be. I get that. But more sensibly, what I think is going on is people are saying to themselves, I've got this savings and I'm renting, or, I've got this small house and I could use a little bit bigger one. And by the way, I can borrow money long-term at 3%. That's pretty cheap. Gosh, probably the best thing, or even I could buy a house and rent it out to somebody else. That's not a bad investment. I know I have the house. It's a tangible thing that, that costs money to replace. And so, they get bid up. I mean, they get bid up, and people are doing it in the rational belief that asset will hold more value than the cash or the bonds that they would have bought before this whole problem really surfaced, as it did so violently in March of last year. So, it's it's a crazy environment, and most people have never seen anything like it. I've never really seen anything like it, but I understand it because I've studied it. I've studied monetary history. I was an economics major, and I've been interested in this stuff for my whole career. And so this is the macro picture that then informs me. I mean, when this whole thing started happening, and it really kind of started in 2008, and I got into it then, but this is the macro picture that informs me that inflation and bets on inflation have a macro tailwind. Do you know what I mean? Inflation's going to make anybody who's long, hard stuff do better than people who are, in bonds, for example. But then within that, I looked and I studied in the 70s, the last time we really had inflation, we had a real decade of inflation in the 70s. Two best performing stock categories were oil and gas and gold and silver. And oil and gas was slightly different because you had the Arab oil embargo and some stuff there that really kind of drove that market harder than it might have been just in a normal inflation.
Yes.
But in the gold and silver area, it just, it's pure monetary debasement and inflation. And, gold went from $35 to $800 over the course of that decade. And so I think this is going to look very similar. I think people are going to be shocked how high gold can go. I think it's going to go to 10,000 or more, and it's at 1,800 now. So I started with, okay, let's get into commodities that respond the best to monetary debasement and printing. I came to gold and silver. Then I looked at it because I'm an investor picking companies. I said, well, okay, you can buy gold and silver, but frankly, they just sit in a vault. They don't pay dividends. They don't grow. They'll go up as much. Really, gold and silver going up is really just the dollar going down, right?
Yeah.
They're printing too many of them. They're becoming worth less per dollar. But and I said, well, what businesses make gold and silver? Well, they're the mining companies. And so in 2008, when I shifted into this area, I really, kind of focused in on the mining companies. And I've been doing it now for 12 years, almost 13 years. And the gold mining business can be a very lucrative business if you have the right macro tailwind and if you have good people. Having said all of that, it's actually kind of a shitty business at a fundamental level. Because, unlike a SaaS software company or a biotech company or, a lot of these cleaner businesses where you build up a brand and you build up, recurring revenue and so on and so forth. I mean, the gold once mined, it's gone. You got to find more. And it's breaking rocks. I mean, it's drilling rocks and getting underground or open pit and breaking rocks. It's got all kinds of environmental challenges, permitting challenges, ownership challenges. I mean, it's a shitty business. It's a hard business. Having said that, when you get it right, it can be incredibly rewarding. I mean, you can find a company that's very small in market cap and drills a big deposit and goes up 100 times.
Yes.
So it's got a real lottery ticket kind of feel to it. And and there's an enormous difference between, I mean, there are hundreds of companies, big companies in gold market space. There are thousands if you can count all the little ones, but a lot of them are junk. And so it's, you can buy an index and that'll help, and those do reasonably well.
Mm-hmm.
But there's a lot of value added if one takes the time to really understand the people and the management and the geology. I have a couple of geologists on not on my staff, but I use as consultants to help me sort out the right companies. And that's how the numbers I've gotten are as a result of that. I mean, I'm trying to pick the best of a bunch of pretty tough businesses, and people should be very aware of that. I mean, if they, at some point, everyone's going to rush into this area, and they're going to rush in willy-nilly. And if you got gold or silver in the name of the company, it's going to be like, it was with the marijuana stocks or the .com stocks or whatever.
Yeah.
Everybody's going to say, give me some exposure to that. And I can tell you, there are going to be some huge mistakes made because they're just not all the same. And there's some that are just really bad, and there's some that are outright frauds. I mean, there are also, the people in this industry, it's not known as being, a genteel, nice industry. I mean, there was the Bre-X scandal in the 90s, and there have been other, there are guys in this business who are, promoters and not doing ethical business. I mean, they're ethical miners who are trying to build clean mines that will not damage the environment and are being very honest about what they're doing. And there's risks involved, but they'll tell you what the risks are. And you can evaluate them and decide, all right, this may not work, but if it does, there's a good reward, so I'll take that bet. But then there are others who are just like, no, this is a no-brainer, and they're pounding the table and they're promoting the shit out of it. And I know them now, and I can see them coming a mile away. But if you're new to this area and you're thinking, oh, I'm going to go invest in gold miners, I'm going to make a killing because we've got a great macro tailwind, which we do. Well, you might if you get out right, but you'll do a lot better if you pick the better names, because there's a big variability between the good names and the bad names. So that would be my one piece of advice to your audience or investors who are looking at getting into this area, is you need to do some research and you need to get to understand what you're looking at. I mean, I'll make a record. People say, well, okay, fine, what? Well, you come into my fund, but unfortunately, because of the rules, you got to be a fairly good sized investor to do that. But there's a really good site on the internet called Gold Stock Data, www.goldstockdata. It's run by a guy named Don Durrett. He's a big participant in Twitter, and you can subscribe to his service for, I want to say $150 a year. It's very modest, right?
Yeah.
It's a wealth of information. It tells you his favorite names. I mean, it's the best $150 you ever spent, because he knows which companies are good and which ones are bad. I mean, he doesn't know them all. He doesn't know them perfectly. You got to do your own work too. But for somebody, if somebody were looking at me and saying, hey, I want to learn about gold stocks and maybe start to pick a few on my own, because GDXJ is kind of big and it's boring. It's not growing that fast, and and there are a lot of junky companies in GDXJ, by the way.
Very much so.
The first thing I would do is I would direct somebody and say, go look at gold stock data. You'll learn a lot by going there. So,
very cool. The one thing I'd go back to a little bit, you mentioned in your report, you talked about the 1930s and talked about Roosevelt. And so that also leads me to think about the gold seizure. And so thinking about the gold seizure that happened, kind of, we were talking a little bit earlier about Bitcoin a little bit. Now we have this impossible inflationary period, most likely, where you and I see it, but, they're not talking about it yet. But if we're also in that period and we're kind of seeing that people are running to other things, and then we have this thing now, could it happen in gold again? I'm not sure, but could it happen in Bitcoin? I think so.
I mean, you brought up a fabulous point, which is the government's really not our friend. And that's part of what makes this whole trade so hard. And it's part of why a lot of people won't touch it, because they actually like to believe in, Santa Claus and the Tooth Fairy and all that shit, that the government can make our lives good. And I guess, look, there's many things government does which are very good, and I don't hate all government, but there are things the government doesn't do so well. And I think the incentives are set up where they tend to debase money over time. And, obviously they're the main job of the people in government, I think, is to keep their jobs and to keep society as stable as they can. And so what happens is, when this gets acute, like Roosevelt in the 30s or Nixon in 71, or I don't know, maybe today with, Janet Yellen talking about Bitcoin, when it gets acute that other forms of money are going to, replace or damage or hurt, the US dollar, they'll fight back. I mean, they have in the past, and I think they will in the future, and they'll do everything they can to prolong the system as it is, because, frankly, they and the people who pay them and the people who will pay them once they leave office, because, I mean, Janet Yellen leaves office, she made $7 million giving speeches. I mean, that's just
Yeah.
that's just a shadow bribe.
Yes.
I mean, she's not worth $7 million in speaking fees, but they say, when you're in there, do things that are good for us, and when you come out, we'll pay you for speaking fees. I mean, that's kind of this
Exactly.
handshake deal.
All of them. Yep.
Yeah, right. And so what they're going to try and do is they're going to try and mess with us, and that's fine. But governments have messed it with markets since the beginning of time, and that and so what that means, and by the way, they generally lose, but they don't necessarily lose in a linear fashion. They don't necessarily lose instantly. They can prolong things, but I think what we've got going on here is big enough and substantial enough. They can't prolong it forever. And it feels to me like it's getting more and more acute, and they're going to have a bigger problem with it. Will they confiscate gold? Maybe. I honestly, not that many people own gold. So, I don't think, and they've kind of got it beaten
I think
down.
it's unlikely at this point.
Yeah, with all the paper gold, I think it's unlikely. But I got to tell you, if I were a central banker and I saw Bitcoin and all these young kids saying, "Hey, this is the new form of money," and Bitcoin went from 10,000 to 60,000 in the space of 5 or 6 months, I'd be like, "Oh shit, this isn't good." If everyone thinks Bitcoin is a better store of value than US dollars, we're going to have a problem here, right? And so, yeah, I'd throw sand in Bitcoin's eyes. I mean, they're doing that. They're saying, "Oh, it's used by criminals and it's inefficient." I mean, burns too much energy. I mean, they've got all the standard fights, and the more recent one, I think the reason this correction has taken place recently, it's gone from 60 to 50 or so, 48, I guess, at the low, was that somebody put out a rumor that they were going to tax it heavily.
Yes.
Tax Bitcoin gains. And so that, yep, that doesn't surprise me that they would rumor that. Now, will they or won't they? I don't think they can. I think they're going to have a hard time implementing it. But it's, again, the government has a different set of interests. I mean, all of us are interested in preserving our wealth and growing our wealth and investing in a way where if we made some money, we keep the purchasing power of that money over time.
Yes.
The government's interested in keeping the system going and keeping themselves in office, and not having the currency collapse, and not having runaway inflation. I mean, at some point, the inflation will get so bad that people will be getting voted out of office because of inflation, and then it'll become very real to them. Like, holy shit, we got to do something. And I mean, Roosevelt seized the gold, and then, of course, what he did was he devalued by 75%. So he put a whole lot of inflation into one stroke of the pen.
Yes.
And that could happen again. I mean, it's there's a need for a sound reserve currency in the world. It could be Bitcoin, it could be gold. And I think it's what Churchill said. The Americans will do the right thing after they've tried everything else. I mean, we will, right?
Yes.
I mean, we will.
It's a great quote.
We will continue to muddle along here until the inflation just gets so bad, the system's so messed up, and everyone kind of realizes, holy shit, this printing of money it's just making things worse. We need to reset this whole thing. Let's start with a clean sheet of paper. Let's devalue the dollar by X%. Let's return to a gold standard or Bitcoin standard. Let's create something. Let's create some form of money that cannot be continually debased and that politicians can't get their hands on. And let's reset on that with that as the basis of the system. And it'll be painful, and there'll be winners and losers, but I'm rooting for that, because I think on the other side of that is a much better society. Things will get, you'll be able to allocate capital. Capitalism will work again. I mean, capitalism, it's very hard to do capitalistic things when the unit of measure is changing. I mean, I love the analogy. It's like, imagine you're a builder, and every day your yardstick was longer or shorter, and you're supposed to build to a certain standard. And that's kind of what's going on. I mean, you got the money is, I mean, I see Dogecoin worth $50 billion. I'm like, what's this money worth? I mean, it's just,
Yeah.
I mean, really, I mean, it's like, I feel like I look around the world and I kind of look at like, geez, I don't really know what the price of anything is or should be, because of the way the money is being abused so badly.
Yeah.
And with that in mind, I mean, I actually just went out. I didn't think I was going to need a new car for about 2 or 3 years. My car's a lot of mileage. I just went out and bought a car because,
Mm.
I bought it coming off of lease somebody else's car, but it was like $30,000. I was like, wow, this is great. Because I know in 3 years cars are going to cost a boatload more.
Oh, yes.
Yeah, right. And so,
Yeah.
and I think that's probably what people are doing with these houses too. They can see where this is going, and they're like, well, okay, I want to, I want to get in front of it. I want to spend the money now when it really buys something for me, rather than save, because what I save isn't going to be worth as much. So
Yeah, and we're in that type of a period, and we're seeing all these things. You're seeing it in housing, you're seeing it in cars, we're seeing it in every, like you said, hard assets all together, all around are just going crazy. And
right,
someone like you talking about how it's so important to kind of understand this and get into these hard assets of some sort, getting away from bonds and cash and stuff, and you could sometimes I still have these conversations. I'll meet random people. They won't know much about any of this. And you'll have a conversation like this and they'll be like, what are you talking about? That doesn't even make sense. Like, and like, how's a dollar worth any less? And you're just stunned that people can't grasp some of these things. And the
well,
other
yeah,
day when we
yeah,
had Trader Vic on, he was talking about a similar thing with inflation and hyperinflation, and the fact
yeah,
that hyperinflation being 50%, inflation being at 50% monthly,
yeah,
and how that would take 4 months to basically wipe away the debt, and how at some point, and like you said, it's a psychological point. We won't know. It's when everybody shifts and goes, we got to get out of these dollars, and
yeah.
when that shift happens, that's the only way this ends up. You'll never know the timing, you'll never have it perfectly, but either way, the trend right now, to me,
You've
is
nailed it.
inflation.
You've totally nailed it. And it's just not going to end well. And yeah, and it's like anything else. I mean, you want to, you don't. I mean, we're in a crowded, theater, and there's a fire burning. I mean, do you want to be the last one out the door? Do you know what I mean? It's like you want to move quickly here. I mean, this is
Yeah.
one of those instances where, you really want to be early. You don't want to
Yes.
be late on this whole thing, because events will accelerate, in my opinion. And
Mhm.
they've gone too far. They've gone way, way, way too far. And people keep hoping that it's going to come back, and they'll get inflation under control and everything will be normal. But you just can't print the money they printed, without. I mean, I heard a statistic. You probably heard this one too, Jason. Somebody on Twitter had it and showed, like, 40% of the money that's ever been printed in the history of mankind, it's got printed like within the last 6 months or something. I mean,
Yes.
40%, right?
Yes. I
Within
saw
six
that.
months, right? I mean, and I mean, the way people need to think about this is the currency represents a claim on something. A currency is a representative of a claim on, you have cash, and it allows you to buy a doctor visit, or buy a dinner, or buy a house, or buy a car, or whatever. And so, okay, that's fine. And there are only so many doctor visits and houses and cars out there. I mean, obviously, with time and investment, you can make more. But at any
Yes.
given point in time, there's a certain amount of stuff out there, and there's a certain amount of service providers out there. And so, it's kind of like, if you took all the cash in the world and you doubled it, so now everyone had twice as much money to spend. They wanted to buy the same things. They were competing with each other. Why wouldn't the prices double? And that's
Yes.
that's kind of what's going on. The difference is just that, it takes a little while for everyone to figure that out. It doesn't happen instantly, but it's happening very
Yeah.
clearly, because I thought one of the comments you made before we started this interview was very interesting. As a commodities guy, you've never seen a time in your entire career where the price of literally every commodity was going up. I mean,
Yes.
the commodities, always, some things are going up, some things are going down. Depends on supply, demand. You had bad weather, the crops failed, whatever. I mean, if you go out and you look at I mean, I know this because I look at them. You go out and you look at the commodity charts today, they're all just going straight up. I mean,
Yes.
lumber's up 200%. People who are building houses are kind of like, it used to cost me $30,000 worth of lumber to build this house. Now it costs me 90,
Yeah.
90,000, right? And
It's
so,
insane.
guess what? That house isn't going to cost what it, when he's done building it, he might have, in the old model, he might have built it, and it might have been $200,000 to the buyer. Well, no, now that house is going to be $350,000 to the buyer, because the cost of the lumber just went up so much. And the cost of everything else that goes into the house went up too. I mean, one of the ones that blows my mind, I mean, people don't realize everyone's down on mining, but the world would not run without copper. Copper is
Yes.
one of the most important metals in the world for, for electricity, for conductivity, for any kind of building. I mean, copper just gets used everywhere. And there
Mhm.
was so long where copper never would go over $2 a pound.
Yes.
And I haven't checked it today, but I mean it's up multiples of that. I
It's
mean,
over
it's like,
four. Yeah.
yeah, I think it's more than, I think it's high force,
It's,
maybe.
yeah, it's getting up there. It's getting up there
Yeah, it's
again, you know.
crazy. So,
Yeah.
yeah, it's look, it is what it is, and it's kind of sad because there will be people who will suffer. But
Mhm.
having said all of that, I think we need to, as investors and as people who protect their families, you want to do what makes sense.
Yes.
And I mean, hopefully, those of us who do that and then are better off for having done that will be in a position to, because I know this is what I'm going to try and do, to lobby, fight, campaign, etc., for a sound money basis, so that my kids and their kids don't have to live in an inflationary mess.
Yeah.
Because I think an inflationary mess. This is not a pleasant world. I mean, I think a lot of stuff that's going on is a result of unsound money, and a lot of people don't see that or connect those dots. But if you study a lot of history, you can see we've got all of the characteristics, all the social strife, all the
Mhm.
electoral stuff, all the red blue. I mean, all of that. That's all driven by unsound money. People don't connect it, but it is.
They
It
never do because, it's like thinking about when people get upset that they want to be paid more. They
right,
never say, hey, why did the cost of my living go up this much? Why is rent, why are
right,
houses this much? They never connect those dots. So without
right.
connecting those dots, you just get mad. You get mad at the rich, you get mad at, whatever.
Yeah, you get
And
mad at
it's,
your landlord, you get mad at the auto dealer, you just get mad, and all you know is, and that's what's so sad is all you know is you're getting screwed, and
yes.
you don't, and you
Yeah.
and life is getting harder. When which is so ironic, because if you think of all the technological developments we've had in the past 30 years, life
Mhm.
should have gotten amazingly easier for everybody. I mean, the
Yes.
internet. I mean, think of the efficiencies that the internet creates, right?
Yeah.
I mean, we should all be living much higher standards of living than we have today. But part of the reason that we haven't is because of the inefficiencies associated with this unsound money that's caused all kinds of malinvestment, and that's got
Mhm.
Dogecoin worth $50 billion. I mean, the biggest mining company in the world is Newmont Mining. Its market cap is $50 billion.
Yeah.
And by the way, it probably has $12 billion of cash flow, positive cash flow.
Mhm.
And yet, here we got this coin that the millennials are playing with. It's got a $50 billion market. This stuff just makes no sense. And money is like an illusion. It's unhinged. And it could. I mean, I think one of the things people fail to recognize is that it could get really, really strange,
Mhm.
and really it could break free. And yeah, I mean, look, I dream of a day when gold goes from 1,800 to 3,500 or something. I'll make a lot of money. But I mean, gold could go to 15,000. Bitcoin could go to half a million. I mean, it's just
Yeah.
because when I mean, let me give you an example. I've used this in one of my newsletters. I think this is really useful. A good
Mhm.
way to think of this.
Please.
If you think about the world and how much money there is in the world, and I'm going to use the money supplies, I'm going to use bonds, I'm going to use stocks, I'm going to use deposit accounts, mutual funds, 401ks, all of it. Anything that's a financial instrument. I'm not going to include real estate because that's an asset, but that's a hard asset. I'm going to paper money, so something that's in an account somewhere. There's
Yes.
about $400 trillion of that in the world. Okay, 400 trillion. That's all economies, all countries. All right. There is about 6 trillion of, and what's the antidote to that? The antidote to that is what I call old-fashioned sound money, which is gold, silver, gold mining stocks, and Bitcoin. Bitcoin, you can say it's not old-fashioned. Bitcoin's new fashion, but it's an emerging form of sound money. Okay, that's about $6 trillion. All that 400 grows at between 10 and 12% a year because of all the money printing. Faster the past year, but historically over the past 15 years, about 10 or 12% a year. Okay, fine. So that's getting debased, or that's growing. And if the economy was growing at 12% a year, you'd be even, because you'd be higher living standard, growth in money. Okay, fine. But it's not. Economies are growing at 1 or 2% a year. The money supply is growing at 12% a year. So underlying is fundamental, like about 10% inflation.
Mhm.
the gold and Bitcoin stuff is 6 trillion. The other stuff is 400 trillion. What happens when all the guys who hold the 400 trillion go, you know, this shit's getting debased. It's not worth as much anymore. I need to find something that governments can't debase. I need to find some kind of monies and stuff. And some of it will go into real estate. I mean, we're seeing that, right? Well, okay. Yeah, instead of the savings account, I'm buying a house. Fuck it. I know that'll hold its value, right?
Yeah.
But some of it's going to come after that 6 trillion of sound money stuff. And let's say only 10% of the 400, the people wake up and go, I'm being debased. I want out of here. I want something else. 40 trillion coming after 6. What do you think is going to happen to the price of the 6? I mean, gold's growing, the supply of gold's growing at like 1%, 1.7% a year. So the supply of Bitcoin is capped at 21 million. It's growing still, but each halving reduces that. But it's the supply of Bitcoin is got an upper limit to it. And the mining stocks, well, there'll be more mining stocks. The stocks will be created, but the point is that there's a limit. And that 400 chasing the 6 is going to go up just an enormous amount because it's got a characteristic that the other doesn't have, and that is it's limited in supply.
Yes.
And for money to work, it's like monopoly money. Why doesn't monopoly money have any value? Because Parker Brothers just prints it in unlimited amounts, and there's no backing behind it, and so there's no value ascribed to it. And so when it becomes clear that that's what's going on in the financial world, our stuff, the things that we've invested in, I think are going to do very, very well. I think all people who have any savings or capital or investing or in the investment business should have some piece of their assets here, some piece. I mean, I'm not suggesting necessarily all. I understand the risks in Bitcoin and government risks, the risks in gold of confiscation.
Yeah.
Gold business is a hard business, but gold mining business is a hard business. But in general, this is an area that protects one against monetary debasement. It's probably the best area for protection. I'm not aware of anything that's better. And so, to not have something in this area, given what we see happening in the world, I think is very, very poor investment decision making.
I do as well.
Yeah.
So to jump into a couple of questions before I gotta let you go, that are just kind of more trading based, kind of more on the miners. Yeah. Where exactly are you kind of thinking the best position for the next run would be? Like I said, I'm more of a macro guy. I'm mainly going to look at the sectors, and then I'm going to try to position well. So I'd love to hear your views on juniors, explorers, majors, any picks that you like.
I'll share a few names when we talk about the categories.
Obviously, you can't share too much. But
I'll give a couple, but so there are 3 categories of mining stock. Okay, let's just go through them. There's the drill story. These are the guys who have some land. It's usually on trend with some other land that has gold, and they've done some geo surveys, and they've come to the conclusion there might be gold in there. So let's go poke some holes and see. And these are the most speculative. A lot of them fail. Some of them work. If they work, they can be 10 to 100 times your money. So this is a little bit like a lottery ticket, but if you get good guys with good land, you can increase the odds that the ticket's going to pay off, and that's not a bad place to be. And in the early part of the cycle, if the gold market's 9 innings long, in innings 1, 2, and 3, some good people with some decent land, and usually they sell so cheap they might have already found some gold. This isn't a bad place to be. And I was there a couple of years ago, in these drill stories, and I still am, but they're not as cheap anymore. And, it's not quite, we're a little further into the market, and I'm moving away from that because I can't find as deep a value. I mean, people now are like, okay, this is a gold bull market. So the drill stories aren't quite as cheap as they were. Okay. The next category is once the company's got some resources to find, they throw them into a bucket called the 43-101 resource bucket. That says, all right, we've proven out that there's 1 million ounces here. Well, you can multiply that times 1,700, say, okay, that's worth $1.7 billion. You got to drag it out of the ground. That's going to cost you a lot. But the point is, once you've got a resource, then you've got some value. But now the issue is, what are we going to do to mine that? And how mineable is it? What does it cost to mine it? What will it throw off in cash when we do mine it? And how much CapEx do we need to mine it? That's a developer.
Mhm.
And the risk there, of course, that they can't raise the money, that it takes longer, that they don't get the permit, that they've misestimated the size of the deposit. A lot of risk there. But if you get them all right, that's 10x your money pretty easily. Okay. The third area is the producers, and these are companies that have already built a mine, and they actually have gold coming out of the ground or silver, and they're generating positive cash flow. So here you got a company that's actually mining ore and has positive cash flow, and they go from little companies that are doing as little as 50,000 ounces a year, all the way up to Barrick and Newmont, which are mining 5 million ounces a year,
Mhm.
and everything in between. And the problem with, and Barrick and Newmont are kind of the first go-to big names. If you're an institution, you want to buy a gold miner, you buy Barrick, you buy Newmont. They're the two biggest
Mhm.
companies in the world. Having said that, the challenge they face is they're mining 5 million ounces a year. That means they got to find 5 million ounces a year just to replace what they mined,
Yeah.
because these things are, they're depleting assets, right? It's like an oil company, and it's hard. And so their production's not going to grow much. And in fact, arguably, if they don't explore well, they're going to have a hard time replacing what they mine. So the bigger ones, while they're safer because they might have 30 mines and there's not much single mine risk of something blowing up or going wrong, they can't generate, often they don't generate as good a return because they can't grow their production. Okay. At
Yeah.
the other end of the spectrum, you might have the guy who's only mining 50,000 ounces, but he's got a really prospective property. He's going to increase his throughput. He's going to find more ore, and suddenly 50,000 ounces a year is going to become 150,000 ounces. Well, he's just tripled his cash flow, all other things being equal. So that's a more exciting. So it's a growing producer. So in my opinion, the real sweet spot of the mining world, because the developers can blow up, and so unless you really know what you're doing, you got to be careful there. And the drill stories, you can speculate in them, but even they can blow up. Okay.
Mhm.
Once a company is actually up and running and making profits, the odds of it blowing up aren't super high. They're not zero, but
Mhm.
you've eliminated a lot of the base risks. And then the issue becomes, can they grow this thing? How long does the mine last? Will they find new ore? I mean, standard things, but can they add another mine, etc. So what I call emerging producers are, I think, your sweet spot for mining profits, mining stock profits. And they have, because they make money three ways. One, they make money with gold. All gold mining companies will go up in price if the gold price goes up, because everyone
Mhm.
just discounts back. Okay, $2,000 at $1,000 gold, this company's worth this. At 2,000, it's worth that. It's 3,000. You can
Yeah.
all do the math. So gold going up, that's your macro tailwind. That'll make them all go up. Okay. Um, Producers, the nice thing about them is those higher prices will increase cash flow. You can apply a multiple to it, etc. The second way gold companies go up in price is they get multiple expansion. So when they're small, they might have a single mine, right? And
Mhm.
there's some chance. I mean, mining is like Murphy's law really applies to mining. Okay, whatever can go wrong will go wrong. The mine floods, somebody gets hurt, the grade peters out. I mean, it's a tough friggin' business. I mean, everyone thinks, oh yeah, you find some gold, you mine it, you make a fortune. No, I mean, there's a lot that can go wrong, and the quality of the people and the deposit, there are a lot of pieces that all have to come together to make it a super profitable situation. But and so when you're a single mine that's doing pretty well, let's say you got good people, it's good mine, it's good deposits, growing and all that, but still something can go wrong. And so as a result of that, your single mine small company might trade at 3 times cash flow, whereas
Yeah.
Barrick's trading at 11 times cash flow. Well, guess what? As that single mine small company adds a few more mines, gets a few more years, proves out more resources, does a lot of things right and gets bigger, now maybe it's got 3 mines, and now maybe it's got more resources, and now maybe it's got more profit. Everyone goes, you know what? This really isn't worth 3 times. This is kind of worth 6 times.
Mhm.
So, hold everything else constant, hold the gold price constant and hold the production level constant. You just doubled your money just because your multiple expanded, right?
Yeah.
Because it became more credible. Okay.
Mhm.
Then the third way you make money is obviously the production grows. If your cash flow at 50,000 ounces, it might be like $30 million a year. Well, at 150, you're going to have 90 million a year.
Mhm.
And so I mean, really valuing producers is as simple as finding out what the free cash flow is and applying a multiple. The boundaries of multiples, low multiples are 3 times free cash flow, and high multiples are 10 or 11. Some are even higher. And kind of average or average medium to stuff is kind of 6 or 7 times cash flow.
Yeah.
So I look for stuff that's on the lower multiple area with good deposits and good people that they can grow production. So then if 3 things happen, I mean, this is the exciting part. I mean, it's Murphy's law in terms of the mines and the business, but here's the exciting part. The gold price doubles, all else being equal, your stock should double. It's even better than that because your fixed costs aren't going to double. So you're actually going to get a bigger than 100% growth in your profit. Okay, so that happens. If your multiple expands, let's say you go from a 3 multiple to a 6 multiple, there's another double. So now you've got 4x your money. And then let's say you grow your production, 300% over the course of 5 years, which some companies do. So there you got another 3 times your money. So now you have 4x. Now you made 12 times your money. So the point is, if you kind of get it all right, there's a lot of upside in these things. I mean, these are not stocks. I mean, the flip side of that is if you don't get that right and something goes wrong, this is unlike a lot of businesses that you invest in stocks, where if it doesn't go right, it'll get bought by somebody, or you're not going to get wiped out. I mean, these things, and mine goes, I mean, these things go bankrupt. They go to zero. I mean, you can literally lose all your money. So you've got to have the prospect of getting what we call, and this is direct service talks about this so well, 2 baggers, 5 baggers, 10 multiples of your money. If it works, we don't know what's going to work. And that's the other thing. You've got to have a large enough portfolio. I mean, anybody who says, well, I'm going to buy 2 or 3 mining stocks, they're nuts. They're absolutely nuts because you're not diversifying away enough of the risk. You need to buy at least 10 that look somewhat good, that all meet some criteria. And, a couple won't work, but a couple will be, you thought that you're going to make 2 times your money, you make 6. And that'll cover for the shitty ones, right? So you gotta have a number of companies in your portfolio. But I told you I'd give you some names. I'll give you some names. Big names. I mean, big safe names. Probably my favorite big safe company is Endeavor Mining. Yeah. Okay, it's over in West Africa. It trades at a reasonable multiple. Management team is excellent. Deposits are excellent. I mean, I think it's an easy double over the next cycle. Probably more than that, probably 2x. Another one that's over there that's much more exciting, a little riskier, but not a lot. It's probably my favorite name right now. It's my biggest holding. It's called Rox Gold, ROX Gold. Yes. Then what else do I like? In the United States and the Americas, there's a company called Equinox, which is doing a pretty good job. Ross Beatty is involved. There's so many companies out there, and I can speak to a lot of them. I mean, Kinross is a big major. That's a pretty good company. I don't own Barrick and Newmont. Not that they're bad. I mean, I put them in my mother's portfolio, but they're not. Yeah. They'll go up. I mean, look, if we have a gold bull market, all these stocks are going up. Okay, all but the really shitty ones. Yeah. The issue I'm trying to deal with is I'm trying to go up as more than the average stock. Absolutely. And so to do that, you got to try and find a better than average deposit, better than average growth, better than average management team, and then, let time do its thing, so.
Got time for one more?
Sure. What is it?
Okay. So the last question and this question actually from Kashap. He actually writes for TDV as well. He's a consultant of mine, an analyst. But he had a question, which was, what do you think of the elections in Peru? Would you invest in Bolivia, Argentina, Turkey, Ecuador, and so on?
This guy is smart.
Oh, he's phenomenal.
This guy's really smart. So
you guys actually remind me a lot of each other. But
really? Yeah. I am terrified of Peru. He knows what he's talking about. Peru is about, from what I can understand, Peru is about to go full communist. If the way it's shaping up now, there's a corrupt person who is business friendly who would be good for the miners, and it's a woman. And I don't think she's going to win. And then there's a guy, my memory is so bad. There's a guy, his name, again, I can't remember, but he's a communist. Okay, he's a real hardcore communist. And he's winning by a lot, 10 points, a lot, and the odds are, and they had a run up, they had the big run, and now it's down to 2 people. So now they have another vote. And I think the communist is going to win. Okay. And he has said right now the deal, and this is kind of true of most countries. It's 70-30. The miner gets to keep 70% of the money kind of involved, and the country keeps 30% of the money involved. And that's pretty common, right? That people come in, exploit the resources, they want to get fees and taxes and all that. Okay, great. This guy said, the guy who's winning in Peru said he's going to flip it around. So it's going to be 70% for the country, 30% for the miner. And people said to him, well, if that happens, nobody's going to want to mine here. He said, fine, we'll take over the mines and run them ourselves. Oh. Right? Yeah. I mean, I look at a company there like Hochschild, which has 3 great underground silver mines, which I love. I love the company. Would like to own this. I own the stock, not a lot. And I think if this guy wins, they're screwed.
Yeah.
I mean, they are completely screwed. And there are a number of other companies, important companies, that have big mining operations in Brazil or in Peru.
Mhm.
So the answer is I don't like Peru at all.
Yeah.
I'm very for if unless the woman wins. If the woman wins, then I'm good. But if this guy, if the commie wins, and we'll know, I think it's in June. We'll know if the commie wins. I'm all the way out of Peru. I'm all the way out of Ecuador. I don't like it. I don't trust it. They say the politics are okay. I don't buy it.
Mhm.
You know, Ross Beatty's in there. He thinks it's going to work. I don't buy it. I'm not there. Argentina, I'm slowly but surely creeping out the door in Argentina. I had a company there I love, Fortuna Silver Mines.
Yes.
You know, it prints as great value and it's a great company,
Mhm.
but a lot of their activity is in Argentina. And Argentina, they basically are doing currency controls. You can't get your cash out.
Mhm.
It's like a 30 or 40% discount on the black market to get cash out of the country. So now they're going to get their investment in Lindero back, but then once they get their investment back, you know, they have free cash flow. I don't think they're going to be able to get out of the country. Now, they might be able to go invest it in other mines and hope for a better political future and blah, blah, blah. I don't want to mess with that. So I don't think Argentina is investable either. Brazil, I'm on the board of a company in Brazil, Amarillo, and I think Brazil's hanging in there and it's okay. I mean, I worry a little bit about all of these countries and just the trend around the world in general,
Mhm.
you know, kind of against wealth and towards socialism.
Yeah.
And I do worry. I've got my eye on Brazil. I think it's
Mhm.
perfectly fine now. But, you know, when you see Ecuador go a certain way, you see Peru go a certain way, you know, you see Argentina go a certain way. Well, you know, Brazil's right there. And maybe
It
the
could happen.
politics, I mean, the politics in Brazil might go south. I
Mhm.
mean, Chile, as far as I know, is still fine. What were the other countries he asked about?
Turkey was just the other. The
Oh,
main
yeah, that's a
one.
mess too. That's another
Yeah.
mess. Yeah, you look at what's
Sand
going
is in
on.
there, you know, and I know, like,
Yeah,
for
well,
me, that's a long-term holding of mine, and it's kind
yeah,
of
well,
it's
that Hod
worrisome.
Madden mine is, I mean, who knows, right? Is that thing
Mhm.
going to get built or not? I don't know. I mean, I got out of Sandstorm as a result of that. I don't want to
Yeah.
take that risk. And, you know, what's the other big Canadian one that, you know, Alamos, you know,
Yeah.
Alamos had a ton of trouble there. So, um, yeah, no, I don't like Turkey either.
Yeah.
Everyone says, you know, a lot of people shit on West Africa. West
Mhm.
Africa has actually turned out to be pretty much okay. I mean, apart from the Semafo thing, which is you know, that was a function of very poor security.
Yeah.
And I've talked to the guys who run all the South African countries and what companies, and what they basically told me and they've done is they've gotten to what they call institutional level security.
Mhm.
You know, they're bad actors in those countries. They're usually just looking for money. They've got guns. You
Mhm.
know, the guys I talked to, I'm not going to say who, but the guys I talked to at various companies, say, look, you know, this company was telling me we spend $9 million a year on security. We have 350 armed people in this company. You know, we're not going to have our people get killed. We're not going to get robbed. We're not, you know, and we have all these protocols of how we fly people in, how we fly people out, what roads we use, everything else. And, you know, there are people who've done business in West Africa for years with no problem if
Yeah.
they do it correctly. So that's there. But and as Rick Rule says, you know, there's really no place that's safe. I mean, you know, they could change the laws in Canada. They could change the laws in the United States. I mean, you know, it's not. I mean, you know, it actually is one of the things I do worry about in the mining business in general. I mean, what happens when gold goes to $10,000 and these countries are all hurting, and they say to themselves, "Well, shit, look at that." You
Yeah.
know, maybe we need to, you know, these guys are making a friggin' fortune. We need to tax the shit out of this stuff. You
Yeah.
know, I mean, I think unfortunately that might be coming, you know, so, you know,
It's a great point.
I'm going to keep my eyes on all these things. And you know, with all miners and all this business in general, I'm not wedded to any one thing. I mean, there might come a time when being in the mining business doesn't make any sense and your best play is just to own gold bullion, you
Mhm.
know, because it's, you know, I mean, it's like the guy on Twitter last night. I said, yeah, you know, what you really, in that environment, what you really want to own is gold bullion. And he came back, or PB, which means, or lead, as in
Yeah.
bullets, you know,
Yeah.
like everything's falling apart, you know,
Mhm.
you're not going to be able to operate a business, you
Yeah.
know, so I don't
Good
know.
points.
I hope we don't go there, you know.
No, neither do I, but it's always a possibility. That's the one thing that I think any good trader, and you've proved yourself as one, any good trader will sit there and go, okay, here's what I'm gonna do, but I know the difficulty. I know what can
Yes.
happen.
Yes.
I know there's people to this day, that we can look at Bitcoin, we can both be bulls on it, but we can also know what can happen.
Oh yeah.
And so, I think that's a great way of looking at
I
things.
mean, part of this game, as I've always viewed it, is it's not just about, it's not necessarily about beating the bear. It's somewhat, because the bear is always there trying to run down everybody in the investment game. But some of it too is just, about, I got to run faster than you, and
Yeah.
it's going to suck when you don't beat the bear. But
Yeah.
but 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 my point is, I mean, so when I see trouble coming, I mean, okay, I'll move on somewhere where I don't think there's trouble. You
Yes,
know what I mean? I mean, it's,
absolutely.
and sometimes I won't. Sometimes I'll take advantage of the trouble and buy in. I mean, a good example of that is Papua New Guinea was messing around with K92 way back in the early days, and everyone thought that it was like Porgia, the mine that Barrick had.
Hmm.
And I did a bunch of research into it. I said, no, Papua New Guinea loved these guys. They were giving Barrick a hard time on Porgia, but it's because Porgia destroyed a river. And my
Yes.
guys were doing it clean, and it was all to environmental standards and everything else. And in fact, I got the guy at the company to show me an email from the Minister of Mines in Papua New Guinea. He said, no, you guys are the poster boy for how to do it right. We're not
They
going to mess
they
with
love
it.
the mining community there. I actually work with a mine there.
Oh, did you? Yeah.
Yeah, they love the
Yeah.
mining community there.
Right. Well, it's like so many things. If you're either a good citizen or you're not. And
Hmm.
that is true in the mining business too. I mean, there are some companies who I know I just wouldn't invest in just because they behave terribly.
Hmm.
I mean, and people figure that out, and it comes back to bite them in the ass. I mean, you gotta do this responsibly. You gotta not pollute. You gotta treat the people well. You gotta
Yes.
include the local indigenous communities into the whole deal and give them a big piece of it.
Hmm.
Even overpaying. You gotta do schools and roads and pump water, and I
Hmm.
mean, that's what I mean. In West Africa, it's pretty cool because a lot of people who really were living at or below the poverty level. I mean, some
Hmm.
very, very terrible conditions. And these miners have come in and, I mean, for $100,000 well, they can literally change the life of a bunch of people who, before that had to walk 2 miles to get their water.
Yes.
There's good stuff being done. Hang on a second, let me just get rid of that. There's good stuff being done in the mining industry, and it's not always talked about. But having said that, there are also bad actors too.
Of
So
course. Of course.
yeah, yeah.
Well,
So
cool. Well, it's been amazing to get to chat with you.
likewise, I really enjoyed it, Jason. I hope we get a chance to do this in the future. And
Yes, please.
yeah,
Please. That-
we should touch base more often because I have commodity questions from time to time, and I bet you're in a position to answer them.
Oh,
So
please. I follow every single one from all around the world. So
yeah,
I'm on it on that point. So please, anytime.
yeah, I might take you up on that. So
Please
once
do.
again, thanks. I gotta hop. You probably do too. But
No,
if
you're
there's anything
good.
else you want to follow up, we do another one.
No, that was phenomenal. Thank you
Okay.
so much for your time.
Oh, no problem. Really, really enjoyed it.
Yep. Same
Um,
here, Lawrence.
okay, take care, Jason. We'll see you, man.